Marvin, my brother, how are you?
I'm doing good. I'm doing very, very good.
Are you back from Vancouver? Are you in sunny San Francisco now?
I'm sunny San Francisco.
So you're on the cutting edge of all of this AI stuff. You're a very good guy to talk to. Marvin, before we go forward, give us a 2 minute background. I met you when you were in the 500 startup days, but
Yeah,
walk us through a little bit of your story arc, your career arc, all the way from when you were at Yahoo, just to give
yeah,
people a background.
yeah. Great. I'll be super quick. So, um, you know, parents Taiwanese immigrants, born in the U.S., raised in Canada, moved to San Francisco 26 years ago. So did the startup thing, was a big tech executive. So I spent about 10 and a half years at Yahoo doing international expansion. Spent about 2 years angel investing boards and then 6 years at 500 startups. And so I started and ran the SF office, was a partner for Fund 3 and Fund 4. So doing a lot of like deals all over the world. So I did 400 plus pre-seed investments. After that, ran a gaming holding company for about 2 years, based out of Ukraine and Germany in the U.S. And then after that, started a small side fund called Diaspora with my friend from here in San Francisco, and I also run an investment holding company with a business partner out of Saudi Arabia. And so we have a bunch of different things. Like we have a MENA focused VC fund. We do a lot of direct deals. So we're like LPs in about eight different VC funds. We'll do more and have done probably another 20, 25 direct deals as well too, all the way from pre-seed all the way to like later stage Series F. And so now basically we also have a credit fund, a real estate fund. So I have my hands in a lot of different things, but my background has been, it's most of my stuff is all centered around tech. And I'm involved in a private equity firm that's doing a lot of like defense tech related rollouts. So I have my hands in a lot of different things, but AI is at the center of a lot of this stuff.
Yeah. Tell me something. You are now in San Francisco for the last couple of years. You've been there for 26 years. So 26 years ago, that would have been in the 1997, 99
Yeah,
timeframe.
99. Yeah, moved there Jan 3rd, 99.com bubble.
Dot com going up and
Yep.
to the right.
Yep.
How does this compare to that? Talk me through 99 to 2001 to 2023 to 2025.
I mean, there's a lot of similarities, but I think the big difference between like 99 was sort of like a lot of the infrastructure was being put down and there were no really profitable companies at that time, right? Like every company was like totally unprofitable. I am, and also bear in mind, like most people left in 2001. So a lot of the cohort that came in sort of like the mid 90s, like very small percentage stayed. Everyone's kind of left. And so, but along that lines, I think sort of Silicon Valley was kind of ignored from like 2001 to, or I'd say written off, right? Basically from like 2001 to like about 2005. And then kind of people sort of like woke up to it. And I think a lot of the hard work of the infrastructure, the core group of people, like really came during that time who end up staying, who a lot of them are still here. And so I think the big difference now is just sort of like this boom that we saw during that time, sort of like, say, not, late 90s. That boom is kind of like in sectors now. And I think like the big difference now is just sort of like there's a lot more knowledge. There's just, like this boom happens in sectors where it's like tech and software has kind of infiltrated almost every industry in general. And so you kind of see sort of like booms where like AI is booming, right? Generative AI and AI infrastructure is like that's booming. But like a lot of the other industries are not doing well, right? Defense is doing really, really well now, but like where before nobody would touch defense even like 3, 4 years ago. And so I think sort of like tech is just so much more, I guess, sort of widely ingrained in most
Yeah.
industries, and nobody's gonna be like, oh, like I just tell people sort of like, well, do you think there's gonna be more tech or less tech in the future, right? Like nobody's gonna be like, well, there's gonna be less tech, and so I think it's just sort of become much more widespread, and in some ways, almost much more consensus for better or for worse.
Is it a lot more competitive now that it's much easier to build in the AI
Oh,
side than it
brutal. Oh
was in
yeah,
the
brutal.
e-commerce
Yeah, it's
side?
Yeah, I think now when we're like, when I was investing as a VC back like in 2013, 2014, where it's just like, every company looked at maybe like 5 to 10 competitors. I just think now, like there literally are like 50 to 100 competitors for almost like every company now. So I just think it's just the competitive set is just much higher now.
Is it also the type and the kind of entrepreneurs that you see now versus before? I do see a lot younger set of people now, right? When I was back in Ariba in 1999, the entrepreneur set was in their 30s, maybe, but most likely 40s. Now I see a lot more 20-year-olds. Why do you think that is?
I think they're closer to the technology. I think particularly since like 2019, 2020, 2021, we see the rise of sort of like low code, no code. And then, generative AI is just basically an extension of this, where just like, wow, the capabilities of AI now have really sort of like leapfrogged. And so what I see that's happening is that it's so much easier now as an early stage sort of like founder, where just there's so many more tools. And so your points of leverage are just higher, where I'm seeing companies hit like 5 million, 10 million ARR with like a fraction of the people you needed, like even like versus like 7 or 8 years ago. And so I do think like we see all the good, but you have to bear in mind there's a lot of laggards. So think about those poor companies who kind of learn the old ways of building companies, where like there you have a bunch of like 10 million ARR companies, but there's like 50 to 100 people there, right? Where it's just like they have a cost structure that and they're kind of I have a bunch of companies in my portfolio where like they started building sort of like right before the cusp of the generative AI tools. And so kind of like they're not they have customers and they have a brand, but like they have a cost structure that doesn't make sense. And they're up against a whole bunch of these little sort of like ants with like AI sort of like eating at them, right? And so I just think it's just like, wow, like that's a tough situation to be in when you're kind of stuck in sort of like no man's land in some ways, right? Like, so I think that's a much harder position than to be an early stage startup or a young founder where it's like blank piece of paper. And I'm like, wow, I see this opportunity. What are the tools I can stitch together with a small core team to go after that opportunity and basically like eat their lunch? And so I think you're seeing a lot of that.
Cohort of companies between 2019 and 2022, right? This is the
Oh
just
yeah, they're
before COVID and
big
COVID,
trouble.
right?
They're in big
They're
trouble.
the ones who are having a lot of trouble raising Series B, Series C because they are, yeah, they're growing at 20, 30, 40%. They have a base of about 10 million in revenue, but they also have a cost base of 15 million.
Yeah. And they have like it's just so hard, right? Like think about it from their perspective where it's like a turnaround, right? Like in some ways you need like almost like a PE mentality or like new management. If you're coming in as new management, like what would you do? That's tough because you're like, wow, like I've hired all these people and I have this core business and it just I have to change like the tech stack. It's just yeah, that's way harder than with a blank piece of paper.
What is it about AI first thinking that these new entrepreneurs have? Walk me through your thinking. Let's say you were to start a company today. What does your AI first thinking mean? Is it about, well, I'm just going to pause there. What does AI first thinking mean? What does it mean for hiring? What does it mean for technology? What does it mean for go to market? What does it mean for customer acquisition? What does it mean for across a lot of these things?
I mean, the way you have to think about it ultimately is like tech is a point of leverage, right? And so if you're starting a company right now with a blank piece of paper, where like think about the role of the SDR, right? Like in sales, right? So I do a lot of B2B with an SDR. Like the reality is that most of the people doing SDR work, like the AI now, there's so many companies like going after like, for example, the AI SDR, where like it's probably 75 to 80% there, right? Like this is what I hear
Mm.
anecdotally from like friends and other investor friends who are just like, yeah, like it's 70, 80% there and it's only going to get better, right? Like let's and so most
Yeah,
SDRs are
we're in
actually
version one. We're not even in version two.
yeah,
We're
we're
just in
we're in
version
version
one of
one.
this.
And so if you if and there's just sort of the joke, right? Like you've heard this joke of from Henry Ford. It's like, sometimes when all I need is a pair of hands, there's a human attached to it. Like you got to deal with the egos, you got to deal with like and I'll be frank, like this sounds terrible, but just like the work ethic of just like a lot of folks coming to the workforce are just like not that good. And so if you're a founder and you're sitting going like I gotta deal with this ego, person's like like just not that consistent versus AI that's 80% there, like I'm going to take the AI or like I'm going to instead of hiring 4 or 5 people, I'm going to hire like one or two and then and supplement it with an AI, right?
I'll give you an interesting anecdote on my own personal self, right? I run an investment management service. So a lot of close to about 1,400, 1,500 people subscribe to my, service, $250 a month or a year sometimes, just to be able to get the key stocks that are in the radar. What am I watching? What am I looking? Which am I buying? What positions should I take? And I had a three-person team in Philippines and India doing a lot of the legwork for me.
Yep.
And they've been doing it for about 18 months, close to about 21 months for a couple of people. And one of the people came to me and said, "Hey, listen, I got a little bit of a personal challenge and I need more money." And I was like, "Yeah, that's fine. I can give you more money. That's not a problem." The week after that, she came back and said, "Well, I've got to take care of my son. There's something going on." I was like, "That's fine."
Yeah.
And I started playing with N8N to automate maybe some portions because what she was doing was pretty step by step written down for her because you've got to follow a process for consistency. In about 2 weeks, I completely automated her job all the way from the analysis to the work to the posting on WordPress to the synopsis on Twitter to sending it out on different social media networks with images and video, completely automated.
That says it all.
I was paying her about $1,200 a month,
Right.
and I automated this whole thing, not including my time, at $56 a month, including API calls.
Yeah, I mean, look, the reality is that look, there'll always be so I think the very famous and extreme cases, Klarna, right? You saw the Klarna case where it's like, well, we use AI and we fired like 700 sort of like customer service, and then and so there was like, oh wow, and so that was sort of like the extreme sort of like hypey part, but then they wheeled it back and said, yeah, actually we realized that the customer service was not as good, so we're hiring back like 100, 200, and people are, oh yeah, see, AI things work. I'm like, no. But like that still means like they remove like 500
400
jobs,
people.
right? So it's just sort of like they're tweaking. And so yes, that's an extreme case of like tweaking, but I think that's what's going to happen. You'll see these companies toggle back and forth where I think most companies will be much more conservative, but they will add this versus sort of like the very aggressive ones where they just rip all the people out. But you're still always going to need people to go and like look over this or for the extreme cases. But the reality is that whether it's you're an accountant, whether you're a lawyer, whether you're marketing, SDR, whatever, where it's like, I'm not saying those jobs are going to completely disappear. I just think you're going to need less of them, right? In this, like in the AI world. And so I think
And
as
you're
a
going to have
founder,
to, the new set of people are going to be very different. The lawyer of 2035 is not going to be the lawyer of 2025, and definitely not the lawyer of 2015 or 20,000 or 2005.
yeah, it's going to be someone who knows how to leverage like really, really leverage the technology. And so I actually think if you actually talk to a lot of Silicon Valley kids now, and I call them kids, right? Because I'm old. There's like a lot of Silicon Valley kids now. Like there's this movement of like small team, big business. And I think that's the future, right? Of just like, how do we make this? And a lot of them don't want to raise either, right? So there's almost like this backlash against VC, which I think is great. And even that, speaking as a pseudo VC, right? Where it's like, I actually think this is a good thing, like going like grinding, building these small teams. Like it's probably going to be a combination of some outsourcing with some automation and AI tools. Like that's kind of the future. And so like massively small, highly leveraged teams.
When you look at VC, there's a certain product they sell. The VC product is a most likely jet fuel engine or jet
Yes.
engine fuel.
Yeah, yeah.
It's not NASCAR fuel, and it's certainly not ride your sedan to Costco and back fuel. They sell you a certain type of fuel that is for a certain type of vehicle for a specific purpose, right? And in the middle, I think a lot of people got confused thinking, oh, if you're just doing that, I can use it maybe even for airlines.
Well,
Forget
well,
about
even I
jet.
mean, yeah, like the reality is, I think a lot of founders got confused. I think a lot of investors got confused of sort of like what is like venture fundable, and I think we're understanding this now. Like the only lesson I learned out of all this stuff is the cost of capital is going to go up. It is inevitably just going to go up, and I think sort of like if you even see the concentration in general, where it's like I think like 30 funds raised like 80% of like the LP money last year, so it's gone to sort of like the bigger funds. That means like there's just a lot less like smaller funds in general. But I also think, that's also reflective of really sort of like what's happening in the space. I think a lot of software companies don't need money, where I think the multi-stages does make sense because I'm seeing a lot more money going to hard tech, where I do defense and other things where like you're
You
doing
need the
massive
money.
rounds because it's hardware.
Let me ask you something. You just mentioned a word most people wouldn't know about it. You mentioned cost of capital. Walk us through that as a layperson. What is cost of capital? We don't understand cost of capital as an entrepreneur. Investors care a lot about that. What is cost of capital? Does it mean I have to give you money to get money? What does that mean?
Yeah, cost of capital basically means like if you're gonna raise money, sort of say equity, like is that sort of like you're giving up sort of like ownership of your company, right? Like versus say like debt. And
Yeah.
so for example, versus say for example in software, like that's software is pretty easy because those models tend to scale, right? You can scale obviously depends on the market, depends on the business model, but like those scale like almost infinitely, right? Like this I'm
Yeah. The
generalizing
marginal
versus
cost is not high.
yeah, versus say, for example, in hardware, where it's like if you're raising all your money based on equity, like your dilutions can be very, very high. There's just the cost of capital tends to be higher in general, right? And where traditionally for reindustrialization, cost of capital is usually a combination of sort of giving up some equity, so raising from VCs or angels or whatever, so a little bit of ownership, but usually it's based on debt.
So when you say cost of capital, what I mean is, let's say I'm trying to raise money right now for my company, and I
Yeah,
give up 10% of my company for $1 million. And 2 years from now, that $1 million has become $10 million for some reason.
yeah.
That costs $9 million for 10% of my company is what you call cost of capital. Instead, if you had taken some other form of capital like debt, you didn't have to give up that 1
Correct.
million.
Yeah,
You
yeah.
wouldn't have
That
had to
I
give up 9 million.
Yeah, that's it, right. Yeah, you explained it way better than I did. I just think the nature just sort of I think there's some global macro things right now. Like we never used to, we're old so like tech guys where we never thought about the global macro. I think, geopolitics have changed. I think the economy has changed, technology, like everything, even demographics have changed where like most of the baby boomers are retiring like between now and next 5 years, like they're not gonna be putting their money into stocks, right? Like they're gonna be moving their money to bonds because they need sort of like something more reliable
Predictable.
and so
Yeah.
yeah, predictable. And so that money is going to be moving out of stock market. That money is going to be moving out of like risk assets, which is like, for example, venture capital is a risk asset. And so I just think there's a lot of changes that people and so basic cost of capital is just I think you're going to be able to, for many folks, are like, why would I put money in these like really risky assets when I could basically just buy a bond or even get treasuries, right? Like 5%, 6%, 7% every single year is probably safer.
Where the circle for me, Marvin, while you say people are taking less risky assets, at the same time, in the last 4 years, good, bad, or otherwise, the amount of capital flowing into meme coins and crypto is at an all-time high. That means people are moving, certain set of people are moving
I
towards
think it's a
more risky
demographic
assets
thing.
for alpha.
I think it's a demographic thing. So I don't know if you've heard of this term called financial nihilism, right? So I think, for example, whether, in general, like if you're a baby boomer, you probably, you have a pretty expensive house that you can sell. You probably have a pretty good stock portfolio in theory, right? But I actually think this financial nihilism is really more toward younger people, like 20 somethings, 30 something. So financial nihilism is like, look, I got 20, 30,000. Like I can't afford a house. And so I'm going to YOLO this thing, right? Like this thing has to sort of like, I have nothing to lose. This is why
10x.
you're
I have to
seeing like
10x.
gambling, right? This is why you see like lottery tickets. This is why you see like meme coins going just like, look, what do I have to lose? Nothing, right? Because if I go down this path, I can't afford a house anyways, and stock market doesn't provide enough returns. So YOLO, right? Like buy a lottery ticket, go into this meme coin that I hope that's going to return me like 10,000x, nothing to lose. And so that's financial nihilism. I think that's why you're seeing that.
Yeah. Walk me through your own use of AI. How are you using it on a daily basis? Who are the people that you're talking to that are using it, you think, in more than just the simple, I'm going to chat GPT and asking it questions type of a situation?
Yeah, I play around with a lot of the tools. As an investor, it's mainly around like research. But
Yeah,
I've been going to a lot of like VC dinners and stuff and talking to other fellow investors, talking to founders and how they're leveraging these tools. What I'm seeing in general is, you saw, for example, the recent news this last year, just sort of like the hiring rate of like new grads, right? Like new
yeah.
graduates from masters or even from like, bachelors. What I'm hearing from, talking to people in law firms, accounting firms, whatever, they're just hiring, they just need a lot less people. And so what I'm seeing in general is you're seeing much more usage. A lot of the research used to take a lot longer. Now it's just like, wow, like this thing takes me literally like 10, 15 minutes to really dig in and do prompts and things. That stuff that used to take me all day. And so, seeing like much more leverage, just faster, sort of like getting the results like much faster. So I can't say I'm like a heavy AI user, right? Because like, I'm not I'm not running a big mass, I'm running investment business versus to say running like operational things. But we're even starting to pull a lot of these tools into sort of how we're managing the fund, right? Whether it's in research stuff, whether it's in presentations, whether it's just like double checking work, right? Like there's a lot more things that time leverage is just so much better than it was. But anecdotally, talking to a lot of my companies, talking to other investors, where it's just like you're seeing velocity is sort of like what we do, like just the velocity is much faster.
Yeah. Tell me about what are you seeing in terms of the new entrepreneurial ideas that used to be SaaS before. I hear a lot of entrepreneurs wring their hands. A lot of investors talk about, man, SaaS is dying. It was a good model for a long time. Now it's
SaaS is
dying
done.
because it's easier to do. What do you think of that?
Well, I heard this term, right? It's like SaaS, right? Like software as a service, right? Versus sort of like what SaaS really now is like service as a software, right? Where before things that agency or people would do, software literally is doing this now. And so that model of sort of like license or seat based is gone, where you're starting to see this movement, even with the big guys, moving toward more of like, you pay me based on outcome. Right. Because it's just so much easier now. Instead, I used to have to throw bodies at this way too expensive. Now I have an AI doing this way cheaper and I could do more of this and you just pay me based on the results and we share like the outcome, right? Like sort of like if I drive results for you, you give me a cut of this. I'm seeing that more toward moving toward that model. And so that wrecks this traditional software model. So predictable, so like revenue model. It's going away.
Yeah. Why do you think it's going away? Is it because people are able to build something custom for themselves? It is the build versus buy model? Or do you think fundamentally we are trying to relook software and say, do we really need all this? Because software was meant to automate, but a lot of software is just become, let me put a nice word for it, a database, for lack of a better term.
Yeah, yeah,
Many
sure,
people don't
sure.
use, many people don't use it for anything other than a system of record, which might serve a purpose, but I don't know what purpose it serves. It doesn't get you new customers or saves you money somewhere.
Yeah, I think that's right. I mean, it just became a whole new sort of like I said, the software development and sort of like complex, right? Where it just became another massive cost structure and I think the reality now is just sort of with the way that you can build software, you can build it for yourself. If you're even remotely technical, you can totally build this stuff for yourself with like AI. It's not going to be great, but like a lot of it is going to be sort of like, with way better UI, right? Like look at all these traditional software companies, like whether it's Oracle's or like the Salesforces or HubSpot, like the UI is terrible. And so I think ultimately sort of like what AI is just basically a much better UX for the database, if you think about it that way.
Yeah, I think the interesting part that I hear from a lot of investors that I talk to is I'll tell you one guy, um, I talk to about six or seven, maybe once a month. One guy's perspective, I'm doing nothing. I've used to invest three to five companies every quarter, and he has a small, he's a what you would call a solo GP kind of
Yep.
a situation here in Seattle area. He said he would do about three to five a quarter, and now he's just pausing. He's
Yep.
he's almost as if he's uh, not able to figure out what to invest in.
Yep.
And another end of the spectrum, I've got this other guy who's just raised a recent fund, and he's on the other end of the spectrum saying, yeah, I'm going to invest in a lot of AI companies because I have no clue which ones will do well. So putting a lot of small bets. Of course, he's not doing it willy-nilly. He may be doing it, I don't know, but he's doing about five to six a month.
That's brutal. I mean, I don't know if I would have. There's no right or wrong answer. At the end of the day, we'll find out like 10 years from now who's right or who's wrong, right? I just find this environment to be very, very hard to be investing in particular software, which is why like I've moved into more like hard tech and sort of like very different stuff. Because I just think like right now there's just so many companies or so much competition. Not that that's wrong. I talk to VCs who are still very, very active, and I think valuations have gone up for better, for worse. Partly because I think the outcomes are still, are much bigger than they used to be. But I also think there's a lot more noise. So I think ultimately it comes down to sort of like how hard you want to hustle or not. Some people are going to make a crap ton of money from this year, right? For people who are investors, I just choose to do it in very different in other industries, I think.
Awesome. Any parting thoughts, Marvin, before we wrap up?
I think I think the parting thought is if you're a business owner, you need to be playing around with the tools, right? Like I'm playing around with the tools. I'm learning about new tools like all the time. I'm going to this like chaos vibe coding session tomorrow to sort of like to really go learn from other folks, and it's almost like a hackathon.
Yeah.
I'm like, I'm not technical, but I feel like I need to sort of like you need to be out there like trying the tools. You don't have to adopt it into your business right away. But I think if you're not playing around with the tools right now, I think like you're going to be extinct, right? Like a good founder and a good business owner, like these tools are going to be really invaluable for you in the future. So better to learn them now than sort of like be behind the curve.
Yeah, so I think one was a forcing function. Remember, I told you about this lady who left and wanted to go do something else, or she didn't want to go do something else. Now she's trying to get back, and I was like, I don't need it anymore because I've automated it, right? The forcing function for me to learn N8N, I don't know if you've heard of that product, is an open source product, N8N. And what it does is Zapier on steroids. Think of it that way, right?
Oh,
It's
wow.
automating, it's Zapier on steroids, but it's open source. So it's you can host your own version of N8N, and it allows you to integrate anything to anything else with the technical flow. So just in the last 2 weeks, I've completely automated my blog posting on earnings analysis, completely automated. It's very similar to what happens in Reuters and every other place, but I can do it at a fraction of the cost. I mean, they spend millions and millions of dollars. As soon as the earnings report comes in, they have something parsed through it, then they create those things, they put it out a press release. In my case, I can just take the same thing. I can make a tweet out of it. I can post it to LinkedIn. I post it to my blog, completely automated with N8N. Nobody to touch it. It happens as quick as the press release comes out from the company.
Yeah, incredible, right? Like, like I've heard good things about like, operator. I think there's still some things that need to be sort of like sorted on that, but even like Manus, like I've agency, like, ad agency friends like leveraging Manus where it's like, wow, like this thing's like pretty awesome.
Yeah.
And and there's so many more of these things, right? Like there's so much competition in this space. So the tools are only going to get better. They're not getting worse. This is one of the great things about all this competition. So like learn the tools, right? Like and you don't necessarily have to sort of like use it right away, but I think you need to understand sort of like the capabilities of it. And one day you will figure out like the superpower of just like, oh wow, like maybe you will have a pressing need. When that pressing need comes up, you'll know exactly which tool to use.
Yeah.
And so I strongly recommend like any business owner, like this gives you leverage, right? Like yes, it destroys jobs, but like that's what's always been the case. I don't, it is what it is. And I think if you're pragmatic of just like how do you leverage it to sort of like free up your people to sort of like work on sort of like higher value things.